Hello, welcome back, guys. Another week is about to open up its doors in terms of trading, and we're taking a look at Alibaba and Tencent specifically today, which have been fined by China because of some monopolistic practices, is the deal. Let's take a little bit of a look at what happened. First of all, we can take a look at our stock news module here just to get an idea. You will see that Alibaba and Tencent stocks plunge after latest fines. And China regulator fines Alibaba, Tencent for disclosure violations. Let's take a little bit of a look here, see exactly what happened. Alibaba and Tencent stocks plunge after latest fines is the deal here. Now, you will see that if you take a look at our tool here, you will see, if we go back to our stock analysis chart, you will see that we are about 4% down right now when the stock market is going to open up. Now, overall, Alibaba has been doing great lately. It has risen a lot since its recent downtrend, where it's almost reached like $80 or so, and it's been climbing. But we're having a 4% day today, down day, after a fine. Now, is that fine like huge? That would imply a 4% down day would imply that we're getting a huge fine for Alibaba and Tencent. Now, if you take a look at the article here, you will see that the fine was about 500,000 won, which is about $75,000. Practically nothing for a company like Alibaba and Tencent, really. This is the max fine, I believe, for this kind of violation. But again, this kind of fine has no bearing in terms of Alibaba's procedures, operations, and everything, or Tencent for that matter. The thing that changes is the sentiment, and it actually causes a little bit of fear, understandably, because people may be thinking that the Chinese crackdown, is not really easing. China has mentioned that the crackdown will be easing, but we're taking a look at this kind of hard to understand, tough to understand events from China. Especially right now, as the stock market has been completely annihilated, it almost seems like they keep on pretty much destroying themselves for no real reason. But anyway, let's see what happened. So shares of Chinese technology firms Alibaba and Tencent fell sharply on Monday, a day after Chinese regulators fined their subsidiaries for not disclosing transactions and failing to comply with anti-monopoly rules. Now, you'll see that Hong Kong Alibaba shares fell about 7% actually, so we could be having a steeper decline when the markets open. Again, this kind of fine is almost like a non-fine. It's literally nothing for a company like Alibaba, but it does strike some fear in the hearts of investors, that's the thing. Tencent actually sank 3.2% and the Hang Seng index declined 3%. So this kind of fine for this kind of practices completely annihilated the market for at least one day here in terms of China. Again, tough to understand why they keep on doing these things, but that's what's happening right now. A list of 28 deals that violated anti-monopoly rules is the new crackdown in terms of what the Chinese government is doing right now, or I should say the Market Regulation Administration. And now you'll see here that it included 5 of Alibaba's transactions and 12 of Tencent's. Somehow Alibaba was fined more. It actually was punished more in terms of the stock market, even though they had less transactions here. It doesn't really matter too much, though. Again, this is going to be a temporary thing, more or less, I'm pretty sure. Now, we did talk about how much the fine was. It's practically nothing. It's like a drop in the ocean. And you will see here that Alibaba's share had risen 70% and Tencent were up to 18% since mid-March. It's easy to forget that Alibaba has been on a roll recently. It has been climbing tremendously. It's important to remember that in a day, a dip is likely to be temporary, is what I believe as well. Again, tough to understand why China is doing that, but we have to bear with that and just give it time. An increase in coronavirus cases is another thing that raises some fears. For some reason, China is still trying to battle, I don't know what, but they are having a lot of lockdowns and they may continue doing that in the future. Again, tough to understand why they are doing that, but it is what is happening right now, and we should be wary about these events. Now, I want to take a little bit of a look at the bigger picture. I was taking a look at this article, which mentions some very, very interesting facts that you may have missed potentially. I have missed some myself here. You will see that this article is talking obviously about China, the second largest economy in the world, maybe about to be first at some point soon. Draconian COVID-19 restrictions, geopolitical tensions in Russia, regulatory crackdowns on tech stocks in China is pretty much what has been happening. Also inflation, I would add here. A lot of events that some of them look almost like they're made up, and some others, maybe random events that you wouldn't expect, are definitely taking a toll at what is happening in the world and China for sure. Now, on June 1st, Shanghai went off lockdown, and it's important to notice that its port is said to be operating at full capacity. A very, very important thing, because this can actually really help ease supply chain constraints, which the world has been feeling a lot lately. Now, Beijing never really went into lockdown, but has been operating at suboptimal levels, yes. And also crackdowns. We do have this today event that again strikes some fear, some extra fear that we wouldn't really expect. But another interesting thing to point out here, and I wasn't aware of this kind of number, 70% of hedge fund managers say they intend to boost their holdings of Chinese stock. Makes a ton of sense to me. And as Chinese stocks seem to be be doing better and better, I think they're gonna be super competitive to the U.S. Market, because they have fallen off a cliff really, and so they can actually get some of, and will potentially get some of their losses back at some point soon. There is a prediction that Chinese stocks will outperform their global peers year to year by 4%. We'll see whether that's gonna be the case. Now, you will see here that the CSI 300 index, which is basically the top 300 stocks of the Shanghai Stock Exchange, has risen by more than 5% since June 1. And this is a very, very important number. It's a very high number, because we're talking about an index here, not just a specific stock. Pretty much pointing out to the fact that the whole Chinese market seems to be climbing lately, as you would expect. At some point that would happen. Investors have invested more than 4.2 billion in Hong Kong's Stock Connect trading scheme for the past month. Another interesting thing to see here. Although total holdings have not returned to their January peak, investors and hedge fund managers are confident that Chinese stocks are worth it. And I definitely agree here. Now, you will see that what is most humbling is the announcement recently that the Chinese authorities will stop the crackdown on internet platforms. The article also says maybe the government has begun to see the foolishness of doing that, or maybe they haven't, I should say, because again, we had this event today. The article wouldn't know about this one that is happening today, this new fine, but it looks like there is still some foolishness going on from China in terms of fining their tech behemoths for minuscule reasons, really. Now, similar signals were given by Beijing last year, and eventually Beijing instantly began intensifying the crackdowns. So most investors are watching to see if they will marry their words to their actions. They don't seem to be doing that, and this is why we are actually getting this decline today. A very, very important thing that we want to see how it's going to be playing out. It's basically as if we're battling China when we're investing in China these days, at least for now. I don't expect this to continue happening for a long time, but I guess that's the agenda right now. We'll have to bear with that for a little while. We also reported a few weeks ago that the US government would soon delist some Chinese stocks due to accounting errors, and there has been some discussion about China and the US actually agreeing to cut down on these tensions and basically ease these tensions. Maybe we're gonna be having a deal there. When that happens, I think it will happen eventually. I'm pretty sure China will climb even more, and actually could help the US as well, having this kind of resolution, really. I think it would help both, frankly. Now, the article is also talking about the Chinese stocks like NIO, for example, which has been climbing lately as well, and EV companies for the most part. Baidu is another one that is a Chinese counterpart of Google, another very, very interesting company for which we have talked about quite significantly, quite a lot in my videos. But pretty much this is what I wanted to talk about in terms of this video. We are seeing a little bit of a weirdness coming out of China right now. We would expect, we'll actually wait for this week to end, see what is going to happen with China, but we may have a little bit of a decline because of what the Chinese are doing right now for their tech companies. Seems like this kind of crackdown is continuing for a little while. Now, as you can expect, you will see here in our social trends module in our tool that Alibaba is absolutely being talked a lot about in stock tweets today. You would expect that, and impressions are like 400% higher. There is some trend going on right now with Alibaba. This, currently the sentiment has been generally speaking positive. This may switch. You may be looking at it switching shortly, but right now it seems to be getting, more trendy, and the Alibaba, I mean, and also the sentiment has been overall climbing from the previous days. This news today will definitely bring it down for a little while, but I don't expect this to continue. Again, we'll see, because you can expect everything out of China. But overall, I think we're gonna be going back to normalcy, and I hope at least. And before I end this video, I just wanted to kind of point out to what analysts are thinking about Alibaba, another module that we have here that can give you a little bit of a quick idea on what people are thinking about price targets. You will see we're looking at the 140, 170 even from Citigroup, 145, 130 here. All of these prices are actually higher than the current price, and you may be looking at other ones which are also pretty high, 176, 158, 144. Going back in May actually. Again, most of these price targets are about at least 130, and right now we're gonna be at about 116, I believe. So it's worthwhile taking a look at what is going to be happening next in the markets, but it's good to know what analysts are thinking, just to get a sense of what is the potential sentiment and what also they believe Alibaba is worth. It's a good idea to get a sense of the overall market reaction and the targets in terms of the price of the stock. So thank you for watching this one. I hope we kind of examined the news here and we know what is happening with Alibaba. Again, we have to be a little bit patient with this one. Remember to like and subscribe if you're not a subscriber already. Obviously, I'm making tons of videos about Alibaba when something new comes up, or new and interesting, among other companies really that I'm examining. But again, thank you for watching this one, and I'll see you soon. Bye bye.